Good afternoon, friends. Welcome to Konexio Technical Insights. My name is Rahul Randeria, and I would be conducting today's show. Today, we would be discussing regarding the trends, the setups, the technical indicators on the Nifty, Bank Nifty, as well as on the different asset classes. But let us first discuss what we have mentioned in our last video. In our last video, we have mentioned that because of the RBI policy, market might be waiting for some cues from the RBI governor, and then it will take a course of direction from that day. And we have a strategy of buy on dips. So on Monday we saw some sort of cool off, and then from the lower levels we have seen Nifty started moving. Nifty started moving its upward trajectory and ended on Friday on a negative note. But looking at the overall pattern seems to be into a highly volatile range. It is moving into a very volatile zone. So the strategy again remains to be buy on dips. But looking at the last 2 days of global markets setup, we feel that from here maybe further correction or further profit booking cannot be ruled out. And then we might see support coming in at the lower levels. So now let us discuss what we have observed on the daily charts of the Nifty. Now I will show you the Nifty daily charts. So this is the Nifty daily charts. This is the range in which Nifty has been moving. This is the main cluster area. So until and unless Nifty breaks this particular level, which is 17,794, Nifty might remain in this range of 17,800 almost, and on the downside maybe 17,000. Now let me show you the Nifty weekly charts. On the weekly charts, Nifty has already taken two support. You can see this red candle and this last week's candle. It is just near the support trend line. So most probably, as I said initially, for the next week, maybe or looking at this particular US market also, we might see maybe Monday or Tuesday, 2 days we might see some sort of correction, and from lower levels then Nifty start rallying towards the upside. So next week would be a highly volatile week. So a further cool off cannot be ruled out from these levels, and from lower levels we might see if Nifty manages to take support around this particular support trend line, and from here we might see Nifty rallying, or if there are global supports, I mean to say global market support, then Nifty might take support from the lower trend line, and then we might see rally coming in the coming days. So definitely the strategy should be buy on dips, but at least for Monday and Tuesday we feel that markets might remain under pressure. So now let us discuss the important supports and resistance in the Nifty for the next week. The important support in the Nifty for the next week is placed at 17,266. Then second support is placed at 17,117, and third support is placed at 17,017. These are the important supports. Whereas on the upside, the first resistance is placed at 17,454. Second resistance is placed at 17,639, and third resistance is placed at 17,730. So as I said, next week could be highly volatile. Initial days, maybe Monday or Tuesday, markets might remain under pressure. From lower levels, we are expecting the market might take support. The selling might get exhausted, and from there we might see counter rally or a short covering rally. Whatever it might happen, that we will see as and when the days pass on, and we will discuss in the next video. But strategy should be buy on dips, wait for 2 days of correction, and then try to build a long position at the lower levels. Now let us discuss what we have observed in Bank Nifty. These are the multiple resistance area, and this is the channel area. So now let us see what are the possibilities of Bank Nifty to perform in the next week. It is into a comfort zone, but as we have seen this particular Friday's candle, it was a gap down, and Bank Nifty did manage to challenge its previous day's high. So this might be considered as some sort of profit booking coming in at the higher levels. and let me see what are the possibility of Bank Nifty to perform in the next week. See, looking at this pattern and looking at the global cues, again, as I said, that for next 2 days, I mean to say on Monday and Tuesday, again, Bank Nifty might remain under pressure. Possibility are that Bank Nifty again might test the levels of 37,700 to 37,600. Currently the Bank Nifty has closed around 38,570. So maybe we might find support around 37,500 to 37,600, and from there onwards we might see Bank Nifty rallying towards the upward trajectory. So again, for Monday and Tuesday, we feel that Bank Nifty might remain under pressure, and then we might see support coming in at the lower levels. So now let us discuss the important supports and resistance in the Bank Nifty for the next week. So important support in the Bank Nifty is placed at 38,192. Second support is placed at 37,802, and third support is placed at 37,370. Whereas on the upside, the first resistance is placed at 38,790. Second resistance is placed at 39,197, and third resistance is placed at 39,560. So these are the important supports and resistance in the Bank Nifty for the next week. We might see Bank Nifty moving into a zigzag manner for the first 2 days of the week. Monday, Tuesday, we might see Bank Nifty might be under pressure from the lower levels. We might see again a counter rally coming in from the support zone. So now let us come to the third segment of our show, which is option analysis. In option analysis, we will try to identify where is the particular concentration or open interest built up in the particular calls and puts in Nifty and Bank Nifty. So now let us discuss what we have observed in Nifty calls. In Nifty calls, you can see there has been action seen in 17,500 calls, then 17,600 calls, then 17,700 calls. Now here you can see there has been a rise in the open interest. Here the implied volatility is into comfort zone. I mean to say it is between just maybe 13.3 and 14. So it is into a comfort zone. But here you can see there has been a significant drop in the option premiums, which clearly indicates that on Friday, after a gap down opening, there might be strong out of the money calls writing seen at the higher levels. Now you can see the total volumes in this particular options: 15 lakhs in 17,500 calls, 11 lakhs and 37,000 in 17,600 calls, again 17,000 in 17,700 calls, 7 lakhs and 78,000. The volumes have been on the higher side. That means the smart money has already started writing out of the money calls in expectation that further Nifty might see some sort of selling pressure, and then lower levels we might see some sort of exhaustion or support coming in at the lower levels. But clearly looking at this data, we feel that Nifty, at least for Monday and Tuesday, might be under pressure. Now let us see what we have observed in Nifty puts. In Nifty puts, you can see the action was seen in 17,300 puts, the 17,200 puts, then 17,100 puts. Here you can see there has been rise in the open interest. Again, there has been rise in the option premiums. I mean to say Nifty puts premiums, out of the money put premium. Implied volatility is a little high. I won't say that it is significantly high, but it is just between 19.98 and 20.40. But the most probably the important thing is the rise in the option premiums, which clearly indicates that the smart trader or the mass psychology or mass public perception is that Nifty might slide further from these levels because of there has been a strong actions in this out of the money puts. So lower levels, we feel 17,100 could act as a strong support, or from there maybe 17,000, which could be the psychological mark. So I would expect that Nifty might take support around 17,100 to 17,000 mark between this particular range, and from there we might see rally coming in the later part of the week. So now let us discuss what we have observed in Bank Nifty calls. In Bank Nifty calls, the action was seen in 38,800 calls, then 39,000 calls, then 39,500 calls. Now here you can see again rise in the open interest. There has been a significant drop in the option premium. Implied volatility is just between 16.4 to 17.18. Now the only important thing which I would like to mention is that a significant drop in this Bank Nifty puts, the out of the money puts. Now here, which clearly indicates that again Bank Nifty might sorry, it is Bank Nifty calls. So out of the in out of the money Bank Nifty calls, we have seen there has been a significant writing seen in this particular strike prices. So on the upside, we feel that 39,000 could act as the major resistance for the next week, and we might see again 800 to 900 points of fall in Bank Nifty from these levels. So as I said, on Monday and Tuesday we might see further correction in Bank Nifty, and in the coming days we will see where Bank Nifty is taking support. We feel that on the lower side, maybe 37,500 could act as a strong support area, but that we'll see on Monday, and we might discuss it on the next week's video. So again, the action looking at this particular open interest data, we feel that Bank Nifty might also be under pressure at least for Monday and Tuesday. Now let us see what we have observed in Bank Nifty puts. In Bank Nifty puts, you can see there has been a rise in the open interest in 38,000 out of the money puts, 37,500 out of the money puts, and 37,000 out of the money puts. Now here you can see the implied volatility is slightly higher. It is just between 23.8 to 26.40. There has been a rise in the open interest. There has been a rise in option premiums, which clearly indicates that smart money is buying Bank Nifty puts, and they are expecting that Bank Nifty might drift lower from this level, and may further drift down to the levels of 37,500 or maybe 37,000 because of and you can see the particular volumes also rising in these options. So as I said, looking at chart patterns of Nifty, Bank Nifty, looking at the option data in Nifty and Bank Nifty calls and puts, the overall strategy would remain wait for some correction at least for Monday and Tuesday. Then we might see counter rally coming in at the lower levels in Nifty and Bank Nifty. So at least for the 2 days, markets might remain under pressure. Global markets will have also shown some sort of weakness on Friday. So at least for the next 2 days, on Monday and Tuesday, market might remain under pressure, and from Wednesday onwards or fag end of the Tuesday, we might see counter rally coming or short covering coming from the lower levels. So wait for 2 days. Do not try to go long initially, and try to just build up long position after a 1.5% or 2% correction in Nifty and Bank Nifty. So now let us come to the final segment of our show, which is positional call. I have identified one stock from Logistic sector. The name of the stock is Aegis Logistic. The rise in the volumes. This volume has been sharp rise in the volumes since last 2-3 months. So which is clearly indicating that stock is into making a bottom at these levels, and we might see a rally coming in from particular levels. The stock has formed a triangle pattern, though the stock has not witnessed a breakout, but looking at this particular price volume indicator action, we might see a stock showing strength from these levels. So yes, you can clearly see it is a triangular pattern. Let me bring more charts. So we will have a classical triangular formation move. Now you can clearly see the stock has seen a significant correction. The stock has been hammered down from the levels of almost 390 marks. This is the high. The stock has been into uh, on a verge of a breakout. This is a break. This is triangle formation, and long-term investors can start accumulating stock from these levels. And as I showed earlier, that the price volume indicators are showing stock has been turning positive from these levels. So for long-term investors, maybe those who have a view of 8 months, 9 months, 10 months view of investment can accumulate the stock in the range of 216 to almost 210 or 205 for long-term investment. We are having a long-term target of 250 in Aegis Logistic. So for long-term investor, the stock is looking good. The stock is on the verge of a breakout. Price volume indicators are showing strength at these levels. Smart money might be accumulating the stock looking at this pattern. The price volume here, the volumes were low. You can see there has been buying. There was no further sell-off seen in the stock. There has been consistent buying with small volumes. Though stock was under pressure, but it did break this particular swing low, which is clearly indicating that smart money might be accumulating the stock and the stock is on the verge of a breakout. So long-term investors can accumulate the stock in the range of 216 to 210 for an upside target of 250 for long term. So let us conclude the show. Thank you very much, friends, for watching the show. Any comments you can give into the comment box, and have a nice trading week. Thank you.